Hello everybody and welcome to Module 1 of Fundamentals of Insurance for Oil and Gas. In this module we're going to cover the principles and fundamentals of insurable risk transfer in upstream oil and gas, and we'll explain all of what that means as we go through the presentation. You'll be hearing from myself, Mike Parry, and colleagues David Pereira and Zoe Ritchie, and we're all working as full-time insurance energy professionals at Aon Energy in London. So without further ado, topics we're going to cover. We're going to take you through an introduction to this subject because you will be, in later parts of the course, hearing several other much more specific and detailed presentations from colleagues of ours. So we're going to give you an overview. We're going to introduce some concepts, some terminology and some language, some players in the game, and try to give you a sense of how they relate to each other and provide value to the community. But we will touch on the concepts of who arranges insurance. We will talk about some of the risks, try to understand how they relate to the overall picture. We'll talk about the insurance coverages and what they are, the extent to which they can protect the companies in this sector for their various interests. And we'll talk a little bit about the culture of the different players in the community. So here, first of all, we're showing you in a very simple graphic format, something which most of you will know extremely well and find quite simple, I'm sure. We're trying here to separate the different sectors of the energy business in order to draw some similarities, some overlaps and some comparisons between the different parts of the community. This is a traditional sort of value chain left to right diagram. And as you can see, what we're suggesting happens offshore is shown here on the left in blue, the midstream area in green, and then the downstream, which is exclusively onshore, on the right in red. Now, for upstream energy insurance, where the three of us are working, and the focus of this session for you, how can we describe how far and wide that sector can actually provide insurance to cover the risks that you care about? Well, it would seem kind of obvious and suggested by the colour scheme of the slide that it's the blue. And here we are using a number of terms which seem to potentially say the same thing. So if we start on the top left, we've used the term upstream, then E&P, but then we've said onshore, and in the bubble below we've said offshore. So ultimately what we're trying to explain is that from our perspective, the upstream world does embrace and largely encompasses, it was thought of to be the E&P world as well, which is exploration and production, which you all will know, but it breaks down between the onshore and the offshore activity. But we're showing them both in blue here, and we would suggest that the upstream E&P market for insurance will cover and provide products and services to both the offshore and onshore sectors. Now, Zoe and David, is that the extent of it, do you think, or is there more that the upstream market can do, more the offshore insurance market provides for the different sectors of business in the energy industry?
Well, I mean, the upstream insurance sector will provide coverage for quite a large element of the midstream operations. So everything actually leading up to the actual refining of the hydrocarbons that's described on the far right of this slide. So where we say midstream, we're talking about sort of the movement of the hydrocarbons that you discover in the upstream operations through pipelines to refining operations, through the transport of the hydrocarbons through specialised vessels to terminals where it's offloaded before it goes into the downstream world. So there is a large element of the insurance market that provides coverage for the upstream that also includes the midstream operations as well.
And that's whether they're onshore or offshore, in fact. It doesn't really matter, does it?
No.
As far as we're concerned. Well, what about downstream then, Zoe? I mean, is there any way that the offshore insurance market ever touches the downstream world and can help?
Not in terms of cover for the physical assets, the refineries and the stuff which is actually onshore. The only small way that the offshore market can cope with the refining and marketing onshore element is in a contingent manner, where you are able to ensure loss of production, loss of profits, business interruption on a contingent basis from something not being allowed to be received onshore. So say you have an onshore terminal which is taking the gas from your platform. It's coming through from the blue blob on the left-hand side. It's coming from the platform through the midstream, the pipeline, into the red and the onshore. If that terminal has a fire or a loss, which means that it cannot receive the gas, then it is possible to make a claim against your upstream E&P insurers for loss of production income or business interruption.
Wow. I mean, that's a really powerful point, isn't it? The fact is then, so whilst these sectors look in some ways quite distinct, there are masses of overlap, and the energy insurance world has, through its evolution, and the different contracts that have been negotiated, it's found a way to actually connect it all up and provide a service which is from front to back end.
Yes, it has, but it categorically, upstream offshore insurers cannot insure the assets onshore, because the reinsurance treaties that these underwriters have precludes them from writing it. They have exclusion clauses in offshore reinsurance treaties against refineries.
Right, so there we are introducing a concept which will be touched on later in modules around upstream E&P insurance, module 2 particularly by Tim Clark, when the concept of treaties and reinsurance behind front-end industry serving insurance is going to have to be addressed, isn't it? But that's great.